Good afternoon and welcome to this weekly market update from MRC Markets. Today's the 24th of September 2013. What I'm going to do today is go through some technical analysis on Euro Dollar Cable, Dollar Yen, Dollar Swiss, Dollar CAD, Euro Sterling and Gold. I'm just going to review what's been going on in the markets since the last video, which was last week. And go through some interesting setups which I think will be key and of focus for this week. And yeah, just go through some technical analysis basically. For any new followers, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website at www.mrcmarkets.com. Okay, then let's have a look at this euro dollar chart. What did we speak about last week? We spoke about this fib here, so I just need to change the colour of this. I've reinstalled the platform, and for some reason the default settings are the yellow. I'll show you blue. There's a little trick here as well. If you don't know about, if you want the levels to come up next to the Fibonacci retracement number, then you put you see a slash. So I'll just draw it here again. So you do space dash space percentage mark and then dollar, and then it will come up. We're not going to have the 23.6 or the 38.2 on it. We're just going to stick to a sort of obvious healthy retracement zone. So we'll just look at the 50% and the 61.8 for the fib retracements, and of course the 0 and the 100% as the low and the high. Okay, then, and there we go. So yeah, this was this was the fib that we mentioned in last week's video. It's played out very nicely from the lows to the highs. It retraced down and bam, it broke up, and it took out the highs. So that fib is done and dusted. So then what I think the focus is now is from the lows here. So basically the low from the bounce up off of the fib, the 50%, that previous 50%, and this would be the new one that I'd look out for personally. So the next sort of dip. So the 50% here comes in at one spot 33.36, and this is of course if it has officially topped out, and it looks like it's starting to come down, to be honest with you. It looks like we've had some strong moves with the FOMC. That was that big daily candle there, with the dollar getting very weak. It looks like it could come back down and retrace, and also there's previous support here as well, and you got this gap which still hasn't fully filled as well, so maybe it wants to come back down, fully fill this gap and then pop back up. And of course you've got the moving averages around here as well, and price does tend to want to come back down to these moving averages. So that is the focus there for euro dollar. That's on the daily. It's the same with the 4 hour, and of course I just said there's some previous support that comes in at this 50% level as well. You can see that lovely 4 hour candle there. In fact, I'll just zoom in a little bit so you can see it a bit clearer. This lovely 4 hour candle here, pretty much to the pip, and right there as well to the pip. So yeah, interesting level that, if it does come back down. But yeah, that's the focus really on the daily and the 4 hour. And to be honest, the 1 hour is just chopping around really. I mean, some would say this would be a bull flag maybe, but I think it will come back down. It's been struggling to go higher, and it's just a slow chop back down, a slow retracement I think on this euro dollar. So yeah, let's see what happens on that one really. Cable. In terms of the daily, well, in fact, actually, let's just go back to the euro dollar. Let's have a look at last week's weekly candle, because I think it is interesting to look at these weekly candles. So last week's weekly candle was quite bullish. Well, in fact, it's very bullish, closed above the 200-week moving average as well. But of course, look what happened here. Last time we closed above it, it was a fake out, and it came back below. So notice last week's weekly candle, we had a bit of upper wick on that, a decent amount of upper wick, which means that sellers have come back in and perhaps taking profit on this, and I think that's what's going on really. It's just we're having some profit taking coming in. It's just a sort of slow grind down, and then I would not be surprised if buyers came in at the 50%. So yeah, anyway, let's go back to the cable and look at last week's weekly cable candle. Similar thing to euro. I mean, it's a green candle. The previous week was very bullish, but a decent amount of upper wick on the candle. I think these weekly candles give a lot of information away. I always look at them every single week. So I think that, I mean, if you just look back through this chart, that the candle after the weekly candle, it pretty much does what it's meant to do. For example, if you've had a big sort of, if there's quite a bit of wick, for example this one here, so a lot of lower wick here, and there's quite a small head, so that's pretty much a hanging man. The next candle followed up, some wicks around here, sort of nice hammer, it did exactly what it's meant to do. Around here as well, look up here as well, big upper wicks. I mean, and you see a bearish engulfing here, and then the next couple of candles followed on. So yeah, I think they're quite useful. So yeah, in terms of last week's weekly candle, a decent amount of upper wick, so I'd automatically say that this week's candle should be a bearish one. Of course, it doesn't have to be a massively bearish one, but I would not be surprised to see it a sort of a retracement candle this week. So a red one with a bit of upper wick, and that's what we're already kind of getting, to be honest with you. We've already had a push up, and now it's starting to come back down. So in terms of the weekly players on cable, they'll be looking at this fib here. I would have thought previous support there as well at the 50%, so that could be an interesting one. So that's the big obvious fib, and that's from the yearly low to the yearly high as well. If you look on the daily chart, I think that's a very interesting one to use as well. But a lot of people will be playing these smaller dips. So with that first one here we've spoken about before, off the 50%, rotated higher. And then this one here, so if you extend the low from the bounce off that previous fib, it came just shy of the 50% and rotated higher. So a lot of people will be looking at this one here. Of course, there's nothing wrong with this one. And see what happens there at the 50% level. And of course, there's previous support there as well. So that could be an interesting one to look out for, but maybe the bigger one is a safer one to play. So yeah, I'll be looking at the price action on that. See what happens. If we get a nice reversal out the smaller one, then there's nothing to say that it won't rotate higher. But of course, if we close below the 50% on 61.8, I wouldn't be surprised to see this bigger one become in play. In terms of shorter term time frames, the 4 hour. Nothing massive interest. I mean, you can use that smaller fib and just flip it to the 4 hour. Really, in the 1 hour, nothing majorly of interest. Really, I think the bigger plays will start to come into focus here and start to play out. So yeah, that's my view on cable. Dollar yen, not a massively interesting chart. I think it's just been much more interesting charts. It's playing in between this triangular formation at the minute. In terms of daily, it's just really just chopping around. The 4 hour, 4 hour is quite interesting actually. You've got this trend line support here, and then what is interesting, so I'm just going to delete these bigger trend lines. So just keep this in terms of the 4 hour focus here. If you looked at this first one here in terms of a fib, so this first move here. So I'm just going to add this 78.6 here because I think it's quite an interesting feature. So this first move here, you can see it came up off of in between the 61.8% and 78.6 retracement level here. Yes, in between this sort of zone. And if you then look at the next bounce, the next move up, similar thing here, in between the 61.8 and the 78.6 and rotated higher. So what I'll personally be keeping an eye out for is if you extend your low there, and then let's say the new high is up around here somewhere. Look what happens if it does. So of course it's still got to come back up first and form a new high, and then come back down. But that's what I'd personally be looking out for, is a move around there. But of course this move is still in play. So this one in between the 61.8 and the 78.6, the bias is still towards the upside, and I think it looks like it wants to complete its move towards the 0.0%. And what is also interesting is that it's come up here, closed above the 50%, come back down, and it's now this 50% is now acting as a decent support. So people are clearly looking at these fibs here and playing it as a sort of buying in between off of the zone here, or just playing supports that coincide with this fib. For example, this one here. So I'm just going to change the colour of that support line. She's a nice bright pink. Sort of stands out, the pink. I know it's a girly colour, but it does stand out. See, off that 98 level was the key support there, and if you look around here, this was also a key support. 90, 96, 92, so pretty much the 97 level key support as well. So you've got the 97 there, and then 98, so maybe 99. Let's say if it comes up and then comes back down, could be a key support there. So yeah, quite an interesting chart, dollar yen. Just one thing to look out for. Of course, it could come back down, break this trend line, and keep on tanking. I mean, if you look on the daily, there's still a lot of room to come back down. So it's not. I mean, I personally probably won't be trading that trend line, but because I mean, I think on the daily it's got a lot of room to come back down. But it's just something to keep an eye out for if we do come back down and get some interesting price action. Just see how it plays out. Dollar Swiss, it's all about this key support here. I think we probably spoke about this in the last week's video. The 90.75 level is near it at the minute. But in fact, if you look at the weekly, if you draw your support from the low of these candles here, you can see it has. This is pretty much the support here, and the 90.82. It's testing it the last couple of weekly candles. Well, last week's candle came back down, tested as a big red candle, but a decent amount of lower wick there to the pip of this level. And this week's candle, it's come back down, tested this level again, and it's starting to come up. So it's all about this level really, this 90.82. So we could get a decent, get some decent traction to the upside here. And if it does come up, I mean, I think these fibs have been playing out quite nicely. We said this one here. From that high to the highs to the lows, came back up 50%, and that rotated down, and that move completed. We spoke about that in the last couple of weeks' videos, I think. So the next, let's say if it does pop back up, this fib here will be quite an interesting one in my opinion. It looks like it want to come back up, maybe perhaps test the 50%, or which could include one of the moving averages, where you could get an interesting bit of a confluence there. With the moving average and the fib line, and then sellers could perhaps come back in. So that would be my focus really on the dollar Swiss for this week. Yeah, the forehand nothing major of interest. So just keep it on the daily on that one. Dollar CAD. I've kept this trend line up from the last week's video. This is from the weekly chart. So the low of 2012. This trend has continued. You can notice. You'll notice that last week's weekly candle, lovely bit of lower wick there. I mean, yes, it's a slight red body, but it's all about the wick for me. Yes, I mean, what is interesting actually is that the trend line from the yearly low to high got broken on the daily, but it did close inside on the weekly here. So you've got the double trend lines there. Both trend lines from the 2013 trend line and this 2012 to 2013 trend line are still holding. So I think the bias on dollar CAD has to be towards the upside here. But of course, as this is a big lower wick, I would not be surprised to see this dollar CAD come down come down today and tomorrow, and maybe even the start of Friday, and then have a strong end of Friday rally to post another sort of similar candle to last week's weekly candle. So yeah, keep an eye on the data. I think we've got some CAD data out today at 1:30, or we definitely will for the rest of the week if it's not out today. So yeah, that's it in terms of the weekly. In terms of the daily, it's all about the trend line as well, really. You can see there that on the daily, if you just want to look at the daily, then I'd look at that bigger weekly trend line there, because that is definitely playing out in terms of this daily chart as well. In terms of the fibs, we've spoken about this fib many times before. This was the 61.8 that held with the trend line support confluence. And then you have this new fib here, which is using that same low. Sorry, if you just extend it, because this is from the bounce off the trend line, if you extend it, then this 50% has held last week. Nice reversal candle, and it's starting to grind higher. You can see that had a nice close above its 200-day moving average. Yesterday's daily candle came back down, decent bit of lower wick, closed above, and today's one's starting to rotate higher. So yeah, the moving averages are having an interesting time as well on this chart. So quite a technical chart here. You've got lovely trend lines, nice fibs playing out. It's a decent chart to look at, in my opinion, especially on this daily chart. So yeah, I think the bias has to be towards the upside over the next couple of weeks, definitely. But I wouldn't be surprised to see it come down maybe the next couple of days and then rally towards the end of the week. But of course it doesn't have to. And on this daily chart, it doesn't look like it wants to be honest, being above this 50% retracement, trendline support, and 200-day moving average. So if we do start to grind higher on this daily, keep an eye on these two moving averages as well, as they will want to look to cap, I think. Euro sterling, in terms of the weekly, it was all about this fib setup here. So you've got the lows of 2012 to the highs of 2013. It hasn't come back down to the 50%. We are getting currently bought up off of this sort of 83.80s level here on this weekly chart. Lovely weekly candle last week. So I should move that a little bit lower. Lovely weekly candle last week. Nice bullish candle, bullish engulfing with a decent bit of lower wick as well off the key support, and it closed above the 50-week moving average as well. So bias, I think, on Euro sterling definitely for the rest of the week is towards the upside in my opinion. If you look at the daily chart, I mean the daily chart, yesterday's daily candle wasn't that great though, quite a bearish candle, but this sort of small fib here is holding off the 50%. I mean, you can see that clear on probably the 4 hour. Yeah, you can see it clear on the 4 hour. Nice rotation off the 50% and 50 simple moving average. I wouldn't be surprised to see this fib get taken out, see this highs get taken out, and then come up towards the 200 SMA on this 4 hour chart. And of course on the daily, the first moving average here is the 50-day moving average, if it does grind up higher. What is also interesting to see in terms of the bears that are still in play, this fib played out last week. Lovely. This is pretty much a pure fib there, so from highs to lows, came back up off the 50% retracement, nice reversal candle, rotated lower and took out those lows. So the one that next one I look out for in terms of selling opportunities will be this one here. So that low, the high there is taken from that bounce off that 50%. So that's the high, and then obviously these lows of the chart here. So if it does rotate high, keep an eye on the 50% here. So you could get a decent selling opportunity there as well. So it could be quite a 50-50 if it does come up to here, which I do think it will. So that will all be determined on the price action, I think. So yeah, interesting chart that, interesting on the weekly and the daily, and of course on the 4 hours, a similar sort. It's the same chart as well, the same fib to look out for. Yeah, so some interesting moves there on the euro pound. Okay, that's done for the forex. Let's have a look at gold. Gold, I've left this chart up from last week's video because it's still, I think it's played out exactly how I said really, with this 50% retracement and rotated higher. I said keep an eye on this trendline support, could turn out as resistance. Surprise, surprise, we got a lovely reversal there, and it came back down. So I think it's all about now, if it comes back down, what happens if it comes down to this 50% again. And in terms of the weekly, this same fib, last week's weekly candle, very indecisive candle there. It's pretty much a doji there, with a fairly equal amount of low wick and upper wick. So we could see a bit of indecision this week on gold, but I still think the bias really has to be towards the upside. But of course, if it does that, it needs to get above this trendline support, or previous trendline support, which has acted as resistance. So we could get a choppy week here on gold, and of course we already are having a choppy week. If you look at that 4 hour chart, very volatile but very choppy. So nothing in terms of shorter term moves, nothing massively of interest. I'd keep it. I'd personally just keep on this daily chart, and just see what happens if you get any clear price action off this clear 50% level here. Then it could be a decent buying opportunity. But no, I won't be getting in any gold this week in terms of this 4 hour chart for sure. Okay, then that's all for today's video. I hope you found that useful. So if there's any other pairs that we'll have a look at next week, then feel free to comment under the YouTube channel or our Twitter feed, which is at MRC_markets. Yeah, thanks for watching, and I'll catch you next week. Cheers.